Everyone knew that the Iran crisis would end. Now it has. The president of Iran has received a letter from Britain promising never, ever, ever to do what they maintain they never have done, stray into Iranian waters. Mystery prisons no one will admit to have been exchanged, and in all probability funds locked in overseas accounts will get released, and have all involved will get medals. Now the mess will slide off the front pages to be replaced by some other fracas du jour. So what about energy prices? Will oil futures hold above $65 a barrel? Will gasoline continue on its steady march past $3? No and yes. No, oil will not hold on to this high. In all probability, we will see futures dip back down under 60 and maybe even dip back down towards the low 50s for a minute or two, but don't get too excited. Just as the current crisis won't last, the lull won't last either. Because the price of energy truly has little to do with the Iranian crisis and everything to do with the poor match between demand and supply. High oil prices can and indeed will curtail consumption, but not by but so much and not in short order, as a great deal of use is hardwired into the economy by decisions made long ago and difficult to unmake now in times of crisis. An example. Both GM and Daimler Chrysler are contemplating bringing 50-mile-per-gallon plus mini cars into stateside showrooms, but only if gas remains over $2.50. Apparently, the heads of these companies haven't noticed that gas prices have already beaten that figure, and that this climb to these heights began weeks prior to the latest crisis. Indeed, prices have been climbing an average of 0.93% per week for all of 2007, and some 2.3% per week for the past 8 weeks. Here we see that inequality of elasticity most clearly demonstrated. And with that trend already in place, it is not hard to predict where gas prices will end up in 8 weeks once the summer driving season is underway. Sans crisis, in 8 weeks gasoline will be selling for $3.10 a gallon. Add in a hurricane, or a broken pipeline, or some irate Venezuelans, and $4 plus by midsummer is by no means impossible. My advice? Continue locking in oil stocks on any dip. I'm Adam Lass, and that's your 60-second buzz.
If you wonder what system Adam bases his forecast on, simply click anywhere on the screen for a free and detailed report, or simply cut and paste the link we provide in the side text into your browser. Adam has an impressive track record when it comes to accurately chart coming trends. I recommend you take his analysis seriously and follow his detailed buy recommendations in his Wave Strength Options Weekly. For TaipanFinancialNews.com, I'm J. Christoph Armbruster.